Hello guys, it's Max here from Daily Market Movements. First of all, apologies for posting this video a little bit earlier than usual, but I've got a very busy afternoon and I thought that, I don't want to not post a video at all. So I thought, early is better than none at all. So in front of me, we have the gold over the US dollar chart. And as you can see, pre-market, we haven't really done much. We're kind of consolidating above 1700, which is, it's welcomed. We haven't dropped back below 1700, which should be seen as a positive. And I think from here, over the next couple of trading sessions, we will trade up towards 1750 and then eventually 1800. Medium to long term, however, we may see some speed bumps along the road due to the fact we've had a bearish crossover with the 50 and the 200-day EMA. That's what that blue cross is that I've just circled on your screens. We've had the 50-day EMA pierce below the 200-day EMA. For all the new traders out there, what this means is that it means, it kind of sets a tone for the medium to longer term picture for gold. It is bearish. That's what my indicators are telling me. I've used the 50 and 200-day EMAs for years now, and I must say they are by far one of my favorite indicators out there. You don't have to buy a trading course worth $5,000 or $6,000 to have access to this indicator. It's there for everyone to use, and they are so good at signaling as to where the markets may be heading next. So I do take that into huge consideration, that it's screaming at me that there could be more downside here for the gold markets. But then, that being said, this purple channel that I've drawn is this, this bullish flag that we've been trading in for some time. Hang on a minute, it's just gone a bit crazy there. Let me just fix it. There we go. So this is kind of like the bullish flag pattern that we've been trading in for some time now. We had a false breakout back at the beginning of January, but we've completely broken down toward the 1700 area. So I think it makes sense from a technical perspective that we do bounce from the 1700 level. Of course, 1700 offers a large psychological figure, therefore buyers should support it. And we are at the bottom of the bullish flag. And what happened last time, the previous two times that we've touched the bottom of this bullish flag, well, we've rallied towards the upside. So if that was to happen this time around, that would forecast a rally up towards 1800, and that would make sense because that's where the 250-day EMA currently stand. But as I mentioned in yesterday's video, I bought two positions down at 1700. I'm targeting 1750, which is roughly this area here, and then of course 1800, which will be for a longer term trade. It may be that I want to close that second trade a little bit earlier, perhaps down at 1775. But we'll be able to look at that at a later date once we're trading above 1750. Short term, I'm bullish, no interest